Do not hold the bag. We're going to talk a bit about bag holding today. I know it's a bit early to be talking about bag holding. We're still not even on the highs or anything. We're almost still on the lows. But with the types of assets that we've been trading here, largely Bitcoin related, they go from the lows to the highs quite quickly. It's going to hit you when you're not expecting it. It's going to happen way faster than you think. And if you're not prepared to drop your bags at the opportune time, you're going to end up bag holding. So we're going to talk about it now. We're going to talk about it early. That way we are prepared when it comes along. We're also going to talk about it more going into the future. So this is not going to be the last time you hear me talk about bag holding and how not to do it. And then at the end, I want to talk about an industry that I don't normally speak about too frequently. I have a few times on the channel, but I think it's time to talk about it again here. So stay tuned to the end for that little nugget of wisdom that's going to be coming at the end of the video, near the end of the video. First of all, we're going to talk about the economic calendar. We've got Michelle Bowman, the Fed, speaking. That is a hawk. They already spoke, so that is already in for the day. I'm not sure how it has affected things. I haven't really looked yet. I really kind of just sat down and started doing trade game. At 7 a.m., we have existing home sales. That'll be a bit of a mover, not a huge mover. The big mover today is going to be the beige book at 2 p.m. Eastern time. That is going to give us insight into how the Fed feels about the economy. So that's going to be the big one for today. Let's take a look at Bitcoin. How is Bitcoin doing? Bitcoin had a pullback. We've been expecting this pullback. It came down to our technical level, did a little bounce, and now it's trying to live alongside that technical level for a minute before it decides what to do. My ribbons here. So my stochastic ribbons, I'm going to call these ones. So basically, I just took the stochastics from this same indicator I was using before that looked like spaghetti. I turned them into ribbons, so it looks a lot less like spaghetti, and it's a lot easier for me to look at. Yellow and green. Yellow on green is good. Purple on pink is bad, basically. And the wider it is, the better or worse it is. So right now it is purple on pink, so that is not ideal for the daily. We can see average force is coming down in the momentum. So we might see this thing come down a bit further, or it might get kind of wispy like it did here back last time and go higher. We'll see. But we are currently on support, and it's going to sit there and flounder for a little bit, trying to decide what it wants to do. And then either crawl back up or crash back down. If we are to crash back down, I wouldn't expect it to go a lot lower than, say, like 62,000 on the low end here if things got like bad. If we got that big volatility, and what would that be, like a 4 or 5%? Let's see, from current values. Yeah, 5% would be 63.5. If we got all the way down to 1962, we'd be looking at a 7-8% pullback, which really is not a big pullback. It's pretty healthy. Okay, so Bitcoin's looking just fine. Let's see real quick what it's doing on the, the 21's all the way down at 65,400. Oh yeah, we got to come down to that 21. We're gonna visit the 21-day moving average EMA. We might visit the 50, but right now it looks like we want to visit the 21. The 21, we haven't seen it in a while. We're old friends. We got to catch up with that thing. Okay, so let's talk about bag holding. And I'm going to bring up CORZ, talking about bag holding. I know some of you are going to get upset about that, but it's run up so much. And I've definitely seen some comments on CORZ talking about holding this thing from like 40 cents out of bankruptcy up until now. And if you've been holding this thing from 40 cents, I mean, let me see here. 40 cents would be all the way down here, which isn't even on this chart because it was during bankruptcy when you could get it at that value before it was relisted again, right? You're looking at a 2,800% increase in the value of your asset. Now, I'm not saying it's not going to keep going up. I'm not saying that it can't go higher. I'm not saying it's going to crash tomorrow. What I'm saying simply is when you have nearly a 3,000% increase in an asset that you hold, especially if you hold a large amount of it, continuing to hold gets more and more dangerous, honestly, at an exponential rate, because you have a significant amount of your wealth exposed to a single asset that is very volatile that could easily give back 50-60%. And if it were to do that, you would go from 3,000% to something like 1,000%. increase, which is still the 10x, but it's pretty depressing. You're unlikely to sell. If you lose 2 of your 3,000% increase, you're unlikely to sell it there and hold it, hoping for it to come back higher, and then it might not come higher. It might grind lower, and then you lose even more. It becomes even more painful. It's an endless spiral. So at the very least, we need to, when we see big run-ups, I mean, even this run-up here just since April on CORZ has been 426%. Honestly, somewhere around the 300% level, which would have been what, like $10 or something. Let me get back in here, do it one more time. What would be the 300%? Honestly, yeah, somewhere around the 300% level at 1050, I would have been taking at least some lifestyle chips off the table, at least my cost basis, maybe a little extra, so I could do something nice on top of that, just to keep things feeling good about it. Like all the money in there is the house's money, and I got something nice out of it on top of that, and I still have the asset growing. That is a concept, right? It's important to do that. Now, I'm not saying dump your bags or anything. I'm not saying CORZ is going to drop or anything like that. Simply saying that when you see huge gains, especially if they happen really fast, it's very important to at least secure some of that wealth. And of course, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. This is simply my plan. I plan to keep my mental health properly attended to in the market here by taking lifestyle chips when they are presented. When I'm up to 300%, I'm going to be taking some of those gains. Like, let me do an example with Mara. Okay, Mara. This thing, I was buying Mara. When was I buying? Oh yeah, I was buying Mara down here. I was buying Mara at like $8-9, right? I was buying like $8-9. It ran up. I held it up to $32, $33, which was a 300% increase. Guess where I sold it though? I didn't sell it up there because I got wrapped up in the, it could go up to 35, it could go up to 40. I ended up selling it all the way down here at about 22 instead of that. So I ended up with a 136% return instead of a nearly 300% return. Because honestly, look where it is now. It's down. It's down from there. I mean, it did go a bit up, but then it came even lower than where I sold at. And I'm currently actually watching it to potentially get back in right now. And honestly, I would probably jump ship on this thing if it were to give me even 80% right now. Like something like even 50% by Christmas. If it happened by Christmas, you better believe I'd be off this thing. And I wouldn't be surprised to see it. That would just be $27. We are coming off of an inverted head and shoulders. We're breaking the neckline right now as we speak. I want to see a little bit of a pullback maybe this week, maybe come back down to like 18 and then launch from there. But that is how I ended up being almost a bit of a bag holder. I mean, I still made over 100%, which was several $1,000s on my Mara, but I had several $1,000s more I left on the table because I didn't get out as I saw things topping, as it made that double top there here between December 2023 and February 2024. Yeah, and I ended up selling it somewhere around $20, up from $8, which is still great, but it went all the way up to $34 because I got a bit in my head about it getting to $40 in that run, and it just didn't happen. And sometimes it's not going to happen. Sometimes you have your marks, you put them there for a reason, but sometimes it's not going to make it there. So it's important to realize, analyze, reassess, and if you are up to 300% in like 60 days, consider taking some of that profit. Lock some of it in, at least some of it in. Maybe just your cost basis, maybe your cost basis plus a date, something like that. And let the rest ride if you want, or completely drop it all if you want. But don't hold forever, because you end up holding a bag for years and years and years. And this time we are not going to be exit liquidity for Wall Street. Okay, that's kind of the big goal here on Trade Cave. We are not going to be exit liquidity for Wall Street, not this time. Okay, we're not doing it. We're going to ride these things up. We're going to take some profit, and we are going to have it good this time around. None of this nonsense giving our money to Wall Street. I hate that. I'm not doing it. Okay? So, how do we know when to sell? How are we going to know when to sell? Well, honestly, well, one, we're going to have our targets, right? We're going to have our targets. For this case right now, for like Christmas right now, my target is honestly back up to 27. Why is it up to 27? Because that's about where the fib cloud is coming down on the daily, about there. Now, can it go past the fib cloud? Of course it can. Now, why would I sell when it hits the fib cloud? I'm going to sell a little bit, right? I would sell a little bit right as soon as it hits that cloud. Why? Because it might just turn around on there. It might not. It might keep going. It's done it before. Why not now? But it could also turn around and come all the way back down real fast. We've seen it before. We'll see it again. It'll come down hard. It'll cut through all that support like it's not even there. And then you'll be like, what happened? We're not going to be like that this time. We're not doing that. So we're looking for that move, that maybe that 50% move, maybe more. And if that happens between now and Christmas, which is honestly just 2 months away, just 2 months, 60 days out, maybe 62 or something, but close to that. If we see 50% or more just on the stock, on the underlying stock alone in 60 days, I think that is a signal that potentially taking some lifestyle chips is warranted. And don't fault anyone for doing that, because honestly, that's just protecting yourself. That's just doing what you are supposed to do. That's what this market is about: buying low, selling high. 50% up in 60 days is high. That is something to take into consideration. Okay, so around Christmas time, if your portfolio is looking super fat and you're feeling on top of the world, take a moment, take a breath, and ask yourself, should I sell some of this? Should I take some profits? Should I lock in some of my cost basis? Should I take some lifestyle chips as well? And of course, you do what you want to do. This is not financial advice. This is not a suggestion to buy, sell, or hold any asset whatsoever. This is simply me saying that this time around, I, here at Trade Cave, am not going to be a bag holder. And I don't want any of you to be a bag holder either, but ultimately that decision is up to you. So that's the goal this time around. We're looking for this head and shoulders. This is just Mara. We're looking for this head and shoulders to come up to about 27, and then that's it. That's all. CORZ, I think CORZ could keep going, but I'm also watching this rising wedge to see it come down, because last time we had a rising wedge, this thing came all the way down from. Now, I'm not saying that this is going to happen, because like that was a crazy circumstance, honestly, but the last rising wedge took us down 45% from the top. Okay, if we went 45% down right now, we'd be back down to $7.64. And that would be pretty demoralizing for a lot of people holding CORZ right now. Now, if you bought it, again, under $1, you're probably going to feel less horrible about that. But, I mean, you're still going to feel bad about seeing a stock that is $14 be trading around $7, no matter how low you got in. So just keep that in mind. Pay attention to that. And if you see tons of gains, maybe consider locking some of it in. Okay, so real quick station break here. Smash that like button if you're still with us here in the video. Subscribe if you've been with us a while and haven't done so yet. We've got a lot more great content coming your way almost every day. Check out the Trade Cave store, link in the description, as well as the channel bio. We've got some great products here. Do not sleep on the sticker shop. Got a couple of fancy stickers here. I'm going to get a few more here pretty soon, available on Redbubble. That link is also in the description and the channel bio. All right, it's bonus time. So, oil. We're talking about oil. Why are we talking about oil? We're talking about oil for two reasons. One, winter is upon us. It is coming real fast. What happens in winter? So many people need heating. How do you get heating? A lot of them are doing it through petroleum-based products, meaning oil is going to get expensive. You know what's going to happen when oil gets expensive? It's also going to increase inflation. But we're not talking about that right now, because that makes me sad. We're talking about oil, because oil is going to go up with that winter demand also. So, as you know, before the invasion of Ukraine, Europe got the majority of its oil products, especially its natural gas that it uses for heating, from Russia. Okay, got most of it from Russia. However, they haven't really been able to buy it from Russia. I mean, they're still buying it from Russia, but they've been buying less from Russia because of sanctions, because they've been sanctioning them over the war. Also, Russia may or may not be incentivized to sell oil and necessary products like that to countries that are actively sanctioning them. So we'll see how that goes in the future, which is going to create an situation where an entire continent is looking for oil. And if an entire continent is looking for oil, you better believe the price of oil is going to go up. Also, there is war in the Middle East that is potentially going to widen out. Who knows when that may happen? It could happen tomorrow. It could be happening right now. We don't know. But if that is to blow up into a larger conflict, guess where a lot of the world's oil comes from? Comes from the Middle East. What's going to happen if a wider war breaks out there? It's going to make it harder to get oil. It's going to make oil more expensive. It's going to make American oil real expensive. Anyways, you can see that we've been on the lows now. So we've come down a big amount here from what, April 2024. We came down. We went down 25%. We're currently down 18%. That's not a bad pullback. That's kind of an average pullback, honestly, on a big downturn. 25% is pretty solid before you start coming right back up again, right? All right. So we're looking at oil. We broke a trend line. We came back to test it. That is beautiful. We came back to test it. Oh, and look what we're making here. Nice higher lows. Higher lows. Is that what I see there? Higher lows. Are we about to make maybe a higher high? I don't know. Maybe soon. We can see that on my momentum oscillator here, the stochastic. We are starting to turn yellow there. That's good. The slower one is closing up and will soon turn green. That is also good. So we're watching this. We're watching this real close. One more aspect of this that has been keeping oil down, honestly, since the war started out. We're about to break the 21 and then the 50, and then we go all the way up to the 200 at 77. Yeah, that's likely to happen. The other thing that's been going on right now, so this is the AI take on it, but the last couple of years since the war began, since the Ukraine invasion, European winter weather has been the warmest it's been in quite a long time, meaning that their demand for natural gas, their demand for petroleum products has been low. Is that going to be the case this year? We don't know. If winter returns back to a normal temperature that they are used to experiencing in that continent this year, or if they have a worse than usual winter, a bitterly cold winter, they're going to be desperately looking for oil. They're going to be spending whatever they need to spend in order to get that oil, and they're going to get it from wherever they can get it from, which is going to drive the price of oil up. Now, where are they getting their oil right now? So where is Europe getting the majority of its oil right now? So let's see, Turkey, okay, Turkey, U.S., Norway, Kazakhstan, okay, India. India is a BRICS country, interesting. Russia, so they're still buying it from Russia in June. EU was the largest importer of Russian natural gas. Most of it going to Belgium, Spain, France, which is interesting because France has been talking about putting boots on the ground in Ukraine to fight Russia. So that's kind of interesting that they're still selling natural gas to them. I wouldn't be if somebody was saying, hey, I'm going to come punch you in the face. Not that that's exactly what's happening, but let's just suspend disbelief for a moment. And then came back and said, oh, I'd like to buy some of your stuff. I'm like, no, get out of here. I'm not giving you any of my stuff. So that's kind of interesting to see, kind of a fun little tidbit out of all this awfulness. Anyways, yeah, a lot of their oil is coming from the United States. Guess what? U.S. oil gonna go up if that's the case. If they have a bad winter, if you start seeing reports of like a cold winter coming out of Europe, you better believe U.S. oil is gonna go up big time, even though it's gonna increase anyways because of just seasonality in general. So anyways, that's the play I'm looking at. Oil and oil companies. So we've got, Chevron, Cenovus Energy is one, Chevron, Exxon, all those ones. Let's look at Cenovus right now. Yeah, this thing's been down in the dumps. It's been on this downtrend here for a while. That's gotten decently aggressive. It's been widening out. I'd just be looking for any kind of hint that it's going to go up, boom, and it's going to pop up. Cenovus, I believe, is a Canadian one. We got Chevron. I can't remember what Chevron's ticker is. There it is. It's just Chev. Got it right the first time. Chevron. That's not right. I don't want the Canadian version. I want the American version. Chevron. CVX. There it is. New York Stock Exchange. There we go. Chevron. Warren Buffett's favorite, Oxy. That's another one to be looking at. OXY. Not saying any of these are like a buy right now, but they are down in the dumps. We are coming up on a seasonality where oil is going to be in demand. There are two major global conflicts that are and will continue to cause the price of oil to go up. There is the potential, if winter turns back to a normalized winter in Europe, or if it is worse than average, we could see inflows into oil pretty quick as they get desperate for oil over there. So that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.